Always trade your style and strategy. Trading offers endless opportunities, and there is an abundance of trading strategies to choose from. One of the fundamental principles that can significantly impact your trading success is to always trade your style and strategy. Everyone has their unique style of trading because they have different goals and expectations from trading, different amounts of capital in their accounts, different risk tolerances, different incomes, and different time commitments. Your job is to find your style and hone in on it. Are you an intraday trader or a swing trader? Do you prefer to trade breakouts or reversals? Are you a trend trader or a range trader? Which sectors and stocks do you prefer to trade? Do you trade at specific time of the day or at the specific location on the chart? All these are part of your trading style. If you create a trading strategy tailored to your style and goals, you will become a profitable trader much faster than those who are always searching out for strategies or trying to adopt someone else's style. It's highly tempting to constantly second-guess your approach. When trades go south or you hit a series of losing trades, the urge arises to change your strategy. Resist such impulses at all costs. The most successful traders stay true to their unique style and strategy through ups and downs. Your style is based on your trading plan or system, which is composed of the rules you'll follow, the strategy you'll use to get in, your risk management and money management strategies, and your exit guidelines. Why trading your style matters. 1. Alignment with your goals. Your trading style and strategy should be chosen based on your financial goals, your risk tolerance, and your time commitment. Straying from your chosen path can lead to conflicting interests and unsuitable trades. 2. Consistency is key. Successful trading is often about consistency. Your chosen style and strategy are tailored to provide a consistent framework for making decisions. Consistency can help you withstand the rough times and build on your successes. 3. Emotional control. When you follow a predetermined trading style and strategy, it reduces emotional decision-making. Emotional trading can lead to impulsive actions and unexpected losses. 4. Focused learning. Deepening your understanding of a specific style and strategy can lead to expertise. Avoid strategy hopping. Maintaining consistency in trading means avoiding the temptation to hop from one strategy to another or switch styles abruptly. It's crucial to recognize that, in trading, there's no one-size-fits-all strategy. The most successful traders are those who patiently adhere to their selected approach, refining it over time. The path to adaptation. It's important to note that sticking to your style and strategy doesn't mean rigidity. Adaptation can be valuable as market conditions change. However, any adjustments or changes should be made methodically, after thorough analysis, and with an understanding of how they fit into your overall trading plan. The ability to stick to your style and strategy can be a game changer. It provides you with a guiding light in the midst of market noise, emotional turmoil, and the ever-enticing allure of new opportunities. By embracing the principle of always trading your style and strategy, you lay the foundation for a successful, consistent, and fulfilling trading journey. Please watch this video to learn more about how to create a trading plan and stick to it. Please subscribe to the channel if you haven't already, and like this video if you found anything of value.